Welcome back, investors, to Ticker Time News. I'm Adam, and the rubber band snapped back in today's trade that had a generally positive disposition, thanks to the feeling that the market was due for a rebound from a short-term oversold condition. The narrative found support from cooling market rates and falling oil prices, as well as some welcome moderation in the dollar after its recent run. The S&P 500, well, it held its ground at the psychologically important 3,900 level yesterday. On the chart in front of you, this is the 5-minute view of the S&P 500, ticker symbol SPX. Remember, you can follow along at home with all the charting. Click the link in the description below to TradingView. Sign up, it doesn't cost a penny, and you can do the charting too. Now, yesterday, right here, just above my head, the market held the 3,900 level, which added to the positive sentiment in today's market. And you can see that the market just took off this morning and never lit off the accelerator until it reached the 4,000 level. That is another psychologically important number for the S&P 500. And that acted as resistance today for the S&P 500. Now, the NASDAQ, it broke a 7-session losing streak as the major indices all closed just off session highs today. Same thing that you can see here on the chart. The S&P 500, bam, right at that 4,000 mark, could not break above it. So we've got this nice rally bouncing off the 3,900 level for the S&P 500 and bouncing off 390 for the SPY, going up to 400. Now, on the daily view, there is a particular trend line here that was broken today. Let me open this up just a little bit, and we'll have to go back and forth. I'm going to go back to that 5-minute chart here in just a second. This blue line right here, it caught the June low. It acted as support when the market bounced off of it in July, really setting off the big rally we had all the way through the trifecta of resistance at the top. But now we're fooling around with this. We had a breakthrough of this trend line last week, a breakthrough yesterday, and it closed below it yesterday. So now that it is here at this mark, I want to go back into the 5-minute chart and I want to look at that particular area here. Let me click a button to make this a little clearer. Look at this blue line here. Today, once the market got to it, there was a bit of resistance. But once the market broke above it, back tested it, it was off to the races to the 4,000 level. That is the next level that the market is going to need to clear. 4,000 or 400 on the SPY. These are just very important levels. Now, this rally, the upper end of the weekly expected move is at 4,018. Today, the market got as high as 3,987. So a few points away from 4,000, and 4,018 is the weekly expected move on the upper end of the range. That's important. Just above that 4018 level, we do have a gap right here, which was created on the way down from hitting the top of this current little cycle we're in, or the breakdown of the head and shoulders move. Now, this box that needs to get filled, or this gap that needs to get filled, is just above the weekly expected move. If the momentum can stay in the market, I could potentially see us continuing to rally, fill that gap, and then fall back into the upper end of the weekly expected move by the end of business on Friday. So that move, that could happen as long as we have momentum on our side. Now, RSI has curled up from yesterday. It is at 31.7, which is just hovering around oversold, which is at 30 points on the RSI. The MACD has flattened out. That is important. Hopefully momentum can shift and maybe we can get up and fill that gap. That gap starts at about 40.45 and goes to about 40.60 on the S&P 500, which would be about 405 on the SPY, where the gap would where the gap begins at. Now, before we jump to what the Fed said today, because that was important, first, we need to talk about Apple, ticker symbol AAPL. Apple held their product event today where they introduced the new iPhone 14, Apple Watch Series 8, Apple Watch SE, I think it was, and the Apple Watch Ultra, along with new AirPod Pros 2. But the Apple iPhone 14 has a partner, and this was pretty incredible. Apple was up about 1% today. Of course, it stopped at its 50-day moving average, where its 5-day EMA is also hanging out right around the 157 to 158 area. So that was resistance today. And for many stocks in the market that have dove under their 50-day moving average, pulling back up to it, finding resistance there, I think will be a common theme, especially going through the charts today. Now, this partner for Apple, Global Star, the ticker symbol is GSAT, G-S-A-T. Why am I pointing this partner out? Because this could be a potential sideshow winner for an tiny satellite operator, satellite company. Look at today's candle for this company. The candle is not what is impressive. What is impressive is the wick. The wick goes all the way up here and all the way down here. That is a huge wick. So Global Star, ticker symbol GSAT. It will be the satellite operator for Apple's new satellite-enabled services for certain Apple products. Now, Global Star will be an interesting company to dig into. We started to dig into this company on our Discord channel underneath the technology section for the 11 S&P 500 sectors. We talked about the potential revenue and so forth for Global Star. So check that out, tickertimenews.com/Discord, and you can join in on that conversation. Now, the stock swung from its bottom to top today, 85%. That's incredible for a $2 stock to swing that high. But of course, as soon as Apple did mention its satellite-enabled services, people had to figure out who is providing this satellite service, and it is Global Star. So just keep an eye on this company. It could be one to watch as Apple rolls out that service. All right, let's get back to the street today. It was sell the news, great for GSAT. Yes, it was. That was a big move for such a tiny company. All right, back here for the S&P 500. The Wall Street Journal reported this morning that the Fed is likely to raise rates by 75 basis points at its September 20 through 21 FOMC meeting. Why is this important? Well, right here, we have this chart that shows the probability of a 50 basis point rate hike and the probability of a 75 basis point rate hike. Right now, there is a 24% probability of a 50 basis point rate hike and a 76% probability of a 75 basis point rate hike. Yesterday, this 76% probability was a 73%. So it has only gone up since Fed speak today. Now, buyers, they were not deterred by the report whatsoever, and that resilience acted as yet another upside catalyst for the market on the basis that the rate hike had already been priced in. Is a 75 basis point rate hike already priced into this market? I mean, we have had a significant pullback from the trifecta resistance high, but is this really pricing in a 75 basis point rate hike? I'm not so sure about that. Now, we looked at the CME FedWatch tool, and it gave us the probability that, yeah, we're going to see a 75 basis point rate hike, but that does not necessarily mean that it's already priced into the market. especially after the market finally gave us that bounce that we've been looking for the past couple of sessions. Now, there was also some hawkish comments from Fed officials for market participants to digest today, which the market took in stride, just completely brushed it off its shoulder. Fed Chair Bernard, who is an FOMC voter, indicating that the policy rate will need to rise further, while the Cleveland Fed President Mester, who's also an FOMC voter, reiterated her previous view that rates will need to be taken to a restrictive level, and that she does not anticipate a rate cut in 2023. There you have it. A Fed official who is an FOMC voter, meaning she can vote on what the rate hike percentage will be, or whether there is a Fed pivot saying there will be no rate cuts in 2023. Now, the market has in no way priced in the Fed not pivoting in 2023. I mean, the summer rally was front run all on the idea that a Fed pivot is incoming. There will be no Fed pivot in 2022. And now we have a Fed official on record saying that they do not anticipate a rate cut in 2023. So the market needs to understand that. That is more reality that the market needs to wake up to. Now, the slight moderation in the US dollar index, let me pull that up, ticker symbol DXY. It has been strong, running strong, and it pulled back today. We talked about this with the 10-year yield yesterday, saying that a pullback today would be likely because everything kind of overshot the 5-day EMA yesterday, including the 10-year, including the dollar. And typically when that happens, we see a pullback coming back to the 5-day EMA. That's what we saw in the dollar today. That's what we saw with the 10-year yield today. So we've seen it before. We saw it again today. And that's what helped to kick off the rally in the major indices and, of course, stocks all across the market. So the US dollar fell 0.6% today, falling underneath that 110 number back down to 109.58 today, in which that helped the buying effort in the broader markets. Now, the US dollar to the Japanese dollar, that was up 1.5% today at its peak and closed up 0.7%. The euro to US dollar was up 1.1% to 1.001. That's basically parity in my book. Now, buying today was broad-based as advancers outpaced decliners by a 3-to-1 margin at the New York Stock Exchange and an even greater than 2-to-1 margin at the NASDAQ. The fuel for this, the dollar that you see in front of us. This chart showed us what was going to take place today. The weaker the dollar, the stronger equities are. And the stronger the dollar, the weaker equities are. The rate of change. The bigger the change, the bigger the rate of change, the faster and further the market moves. That's why you have the SPY up 1.8%, the Qs up 2%, IWM up 2.1%. So the market had a pretty good bounce today. That rubber band had gotten stretched back so far in that oversold position that we just snapped up 1 to 2%. Pretty darn good day in the market today. Okay, the broad nature was also reflected in the 11 S&P 500 sectors. As I go and pull those up right here, look at the right side of your screen. Everything here is green except for one, minus the dollar, of course, that we already looked at. Everything was green but one. Now, 10 since I already said that, 10 of the 11 sectors closed with gains. And those gains, it looks like they range from 1.6% being XLE technology, all the way up to 3.1%, which is XLU utilities. Now, hold on a second. Utilities were the biggest mover today of 3.1%. Well, utilities is a very defensive sector. Very defensive. So what did we see here today in the market then? We saw selling into strength. Waited for the market to run up to the 4,000 level, and then boom, sell, sell, sell. We sold into strength. That's what happened today, right? And with utilities being up the biggest, 3.1%, being the defensive of defensive sectors, that's what we saw. Now, the lone sector in the red today was energy, ticker symbol XLE, down 1.2%. We talk a lot about energy because it's something that is in the headlines nearly daily. Now, energy being down like this, I can adjust the risk to reward here for energy and bring the risk down and bring the reward up higher. That's what we can do today. But this gap right here has now created a gap that will need to be filled. Maybe this week, maybe next week. But there are also a ton of gaps that need to be filled for energy underneath where it is right now. Now, energy fell today amid falling oil prices. WTI crude oil, US oil as a ticker to type into TradingView, it fell 5.9%, all the way down to $81.84 a barrel. That broke below its recent support around that $85 a barrel. Oil is free falling right now. It is dropping pretty hard and fast, breaking support. That doesn't look good. Plus, there was another area of support. There's a blue line running across the screen right along here, okay? That blue line, if we open it up and go all the way back here, let the chart load, let it catch up, load a little bit more, and this blue line is going to take us back to this area right above my head right here. This low, what low was that? That was the March 2020 low all the way down here. Now, that other blue line that I was talking about, let me get the Sharpie out. It goes this high right here, this hump, before this crash right here. And this was in November, the high here, November of 2021. And oil crashed down all the way through to December of 2021. Are we about to see this happen to oil? A breakdown that fast? That's possible, right? So this area, this top was $83 a barrel. This bottom here was getting down to $65 a barrel. If we saw a fall like that in oil, yeah, a lot of people would be screaming top of their lungs, inflation is done. That's what would happen. If oil broke down that much, people would literally be screaming inflation is over. But I think this is just a big reprieve, a big pullback for oil. Now, natural gas futures, they also fell hard today, 4.4% to $7.83 per British thermal unit. Now, Treasury yields, let's talk about them because Treasury yields were also down today, as predicted, I would say. Let's look at the 2-year US 02Y. Let that load. I am so glad this cooled off some, but it was expected. Now, I think we've got to talk about this new resistance area here for the 2-year Hopefully we don't have to talk about it for too long. Hopefully this plane up here where the red line is at the top, hopefully this holds as resistance for the 2-year. Now it fell 6 basis points today to 3.45%. But remember yesterday it was up so much more, okay? More than 6 basis points. So keep that in mind. Now, if we could get the 2-year back down to 3.28%, I think we would be a little bit better. The 50-day moving average is at 3.18. That to me would be a little better space, because that would put us clearly under the old resistance level, okay? I do not want to see this old resistance line become new support. I don't want to see that. And unfortunately, I think this becoming new support is highly probable, okay? I think that can definitely happen. Now, with the 10-year US10Y as the ticker, the 10-year fell 8 basis points to 3.27%. It has been going fast and hard, but this was predicted yesterday during our live stream. We said with that big move that it had yesterday, today it would have to pull back to that 5-day EMA, that 5-day moving average, because that's exactly what happened several times before. Okay, so we've got a pattern here. Whenever the 10-year gets away from that 5-day EMA, it pulls right back the very next day. So that's a pattern we have and something we can count on. And that can help us when we're trying to put our strategy together for what we're going to trade each and every day. All right. Okay. Let's talk about today's economic data. We got the weekly MBA mortgage application index. It showed a 0.8% decline. That's a bit of a slowdown. Remember last week it was down 3.7%. Then we got the trade deficit. That narrowed today, which was good news. That also helped the market to rally. It narrowed to $70.6 billion, which is still, we're losing $70.6 billion on our trade deals. The expectation was $70.2 billion. So not far off from expectations. Now, the improvement was the result of the July imports being $9.7 billion less than June imports, and July exports being $500 million more than June exports. So the real big help here was the $9.7 billion imports being down by that amount. That was the big help, okay? Now, moving on to the key takeaway from this is that I think it conveyed ongoing supply chain and logistics problems, as imports from the EU were down $4 billion, and China was down $3 billion. Supply chain problems still. I think that's the biggest thing that it shows. Now, investor community, everyone on the premium Discord channels or in our Patreon group, be on the lookout this evening for our updated top 10 value stocks list. It will be coming out this evening, and we have a new name on the list. Now, I'm not going to give the name away, but I'll give you a hint. It's one of the world's largest manufacturers of discrete semiconductors and passive components that are essential to designs in automotive, industrial, computing, consumer, telecoms, military, aerospace, and medical markets. So it's a cool name. I can't wait to share it with you. Now you can get it and much more by clicking the first link in the description. And if you have any questions that you would like answered, go ahead, add them to the live chat right now, and we'll go over them. And while you're doing that, can you do me a huge favor? Click the like button, share this video with a friend, and join our investor community by clicking the first link in the description. You'll get instant access to weekly expected moves, numerous trade setups, top 10 stocks lists in 4 different categories, and economic and market insights, all to help you along your investor journey to gaining the knowledge to become better traders and better investors to achieve your financial goals. And if it's your first time watching, consider clicking that subscribe button. If I didn't earn it today, hopefully I'll earn it in the future. Okay, any questions? Let's get them in now. While we're doing that, I'm going to talk about expectations for the rest of this week. First, I'm going to go to the SPY, okay? Let that chart load. Now, the SPY has made almost to the penny a measured move from its head and shoulders pattern that it had. A nearly to the penny move. Since that occurred, we are, the upper end of the weekly expected move is at 401, okay? The bottom end of the weekly expected move is 382. I think we have a greater probability of being closer to that 401 than the 382 by the end of business on Friday. Now, the 401 does line up with the 50-day moving average, which right now sits at 401.25. So it's very possible that the markets slowly drift up. I know today was a big move. I don't think we're going to see a big move like we saw today the rest of this week. But we could continue to drift higher until we get to that 401 area, tap that 50-day moving average, and that 50-day act as resistance. That's what I think would happen for the SPY. As long as there's no crazy bad news, crazy bad headlines that comes out between now and the end of the day Friday, I think we'll drift higher to that 401 area, okay? If we do break above it in that 50-day and the upper end of the weekly expected move, if it gets broken, then I think we'll fill that gap right here at about 405 all the way up to about, man, it's not even that big of a gap. Yeah, it closed at 405.3 and the gap opened up at 403. Okay, so 405 to 403. That's how tiny that gap is. So it's very possible that we could fill that gap and then maybe, come back down to the upper end of the weekly expected move. But the 50-day at 401, that'll be the biggest test that the SPY has this week. Now, moving on to the Qs, who were up 2% today. Very nice day. The Qs have a similar situation. Let's let the weekly expected moves pop up any minute. There we go. The upper end for the Qs is at 304.5. 304. The 50-day moving average right now is at 305. So it is very likely that the Qs continue to move higher as this week progresses. I know it's a short week. We're missing Monday. But I think it'll get to the upper end of the weekly expected move, the 50-day moving average, and it'll find resistance there between 304 and 305. Now, there's a very tiny gap just above the 305, but it literally closes at 307. So again, a very tiny, tiny gap. Now, the bottom end of the weekly expected move, which I don't suspect we'll see, is 285. Now, today we did see selling into strength. So that's why I think we're not going to see another 2% move to the upside this week, and we'll slowly drift higher. Yes, CPI. I might front run some calls before CPI. That's a good one. CPI comes out on the 13th, which is next week. Today is the 7th. All right, so there's the cues. The upper end, 304. The 50-day is at 305. I think that's where it could get stopped out. Definitely find resistance at. If we go to the IWM, which are your small caps, moving 2.1% today, giant move. I don't think there's any more giant moves like that. Now, small caps, they're set up quite different from the SPY and the Qs. The IWM, its weekly expected move is up past its 50-day moving average. Now, the 50-day is at 183. It closed at 182 today. Let's pull that up. Bottom right corner, 182.1. The upper end of the weekly expected move is at 185. So we kind of have a small little gap there between the 50-day at 183 and the weekly expected move at 185. Just a couple of dollars there. I do think it's possible that we slowly drift up from here to that 50-day or the weekly expected move, upper end. Now, on the bottom side of the weekly expected move, it's at 174. Now, those are my thoughts there. I think we could potentially drift higher the rest of this week, and then we get into next week, right? CPI data is next week. A lot of times, the week of CPI, the markets barely move up or down. They kind of just drift towards CPI day. And then CPI day, that's when the big move is for the week. And it's either a big move up or a big move down, all depending on what that reading says. Whether inflation is still high, whether inflation is starting to come down even more. Because remember, 2 months ago, we were at 9.1 inflation, CPI inflation, that is. We dropped down 8.4. Are we going to go lower? Maybe 8.1 or tick higher, 8.5, 8.6. I think if we tick higher just slightly, I think that would be pretty bad for the markets. If we continue to drop with CPI, 8.3, 8.1 in that direction, I think the markets could rally. But I'm not sure quite yet where I'm feeling. I'll do some research this weekend and see where I land on CPI and whether inflation has come down that much. Because one of the biggest reads for inflation is the energy sector. And, people really aren't feeling a relief from inflation. An 8.4, 8.5 reading, that's still high inflation. And that's why the Fed won't pivot. Not in 2022. Okay. Will Jerome Powell's speech on Thursday tank the markets again? Okay, that's a good question. That's a great question. So on the 21st, okay, let me back up. I think what Jerome Powell said at Jackson Hole woke the market up to reality, okay? And that's why Jackson Hole, we've been pulling back. We're having a short-term bounce right now. And we've been expecting this bounce. We've been talking about it for several live streams here. The market got oversold, and that's it. That's why we're bouncing, because markets don't go in one direction or the other. They stair step, they drop, they bounce. Okay. So we were due for this bounce. But I think Jackson Hole, I think Jerome Powell was very blunt. He was very quick about it. And he told us to expect pain. He told businesses to expect pain. We have not seen that pain yet. That pain is still to come. So just because we got this bounce today, which was expected, remember, I don't think are going to go much higher. And then this bounce will fade and will continue on our path down. Maybe CPI is what drops us. But I don't really think Jerome Powell can say anything that is more negative or more to the realization that we have pain in front of us. The Fed's not going to pivot, and market participants woke up to reality, and that's why we had the big sell. And that's why we're bouncing right now, because we were oversold. I think the next time we have information from Jerome Powell that will affect the market will be during the FOMC press conference. September the 21st. That afternoon, we get the press release and we get Jerome Powell in his speech, his press conference. And at that moment in time, on the 21st, when we get the decision, will it be a 75 basis point rate hike like market participants are predicting, with a 76% probability? That talk by Jerome Powell will move the market. But up until that point, I really don't think there's been that much data that's come out that can sway Jerome Powell to say anything radically different than what he already said at Jackson Hole. So hopefully that answers your question. It'll be September 21st in the afternoon when Jerome Powell next gives a talk that can move the market. Anything before then, I don't think he can be any tougher than he was at Jackson Hole. Excuse me. All right. What is your take on crypto like ETH looking to slowly accumulate more? Great question. Let's go ahead and pull up Ethereum. I am a long-term believer in cryptocurrency. I hold Bitcoin. I hold Ethereum. I haven't been doing much trading around them besides just holding. Now, let me fix this chart real quick because it looks funky. There we go. For Ethereum, with its fall that it's had a nice little bounce here. Let's see, when was this? On June the 18th. It's building up a nice little base. Had a head and shoulders pattern. Hasn't really fulfilled that, so I think it's now invalid. I think Ethereum, with this merger it's going through, is going to make it that more, what's the word I'm looking for? You will be able to utilize Ethereum's network even easier, meaning there will be more and more companies utilizing Ethereum's network. I like Ethereum around 1100, 1200 right now. I think that's a good place to jump in to accumulate whenever you have big dips. As a matter of fact, there's not even really a price point that I could put on Ethereum. It's more like when Ethereum has a big pullback, from where it's at right now. Let me open this up just a little bit here. I want to look at this here real quick. All right. So earlier, maybe, let's see, probably about a week and a half ago, Ethereum got down to about 1423, 1420 in that area. That big of a pullback, that's a decent place to accumulate Ethereum. Whenever there is a big percentage pullback, anything over 5%, 7%, 10%, 12%, a big significant pullback in Ethereum's price, I think that's when you accumulate Ethereum. So the price point from where we are right now doesn't necessarily matter as much as being able to get in, purchase some Ethereum when it has a big pullback. And that pullback, it can happen very quickly. Looking at the 29th of August when it hit 1420, I mean, it opened at 1426. It got to a high of 1560, got to a low of 1420, closed at 1551. So these things happen quickly within a 24-hour period. So just having an awareness that when there is a significant pullback, that it's fine to add to Ethereum at these price points. But I would have to maybe put a little caveat there. If Ethereum is getting over $2,000 in a quick run up, like when we look at the head and shoulders pattern, after the first shoulder, when Ethereum then ran up to the head portion of the pattern, it broke $2,000 per coin. You don't want to buy at $2,000 a coin right now when in just a few days after that, you can buy at 1420. So wait for these significant pullbacks. As far as Bitcoin goes, I think Bitcoin is building its base now. My kind of price, not really target, but my zone for accumulating Bitcoin is this red bar here. And it starts at the bottom around 16,000. And then the top of this box is around 20,000. So whenever Bitcoin dips into this box, when it gets under $20,000 a coin, that's when I'm accumulating Bitcoin. And I am a big time believer that Bitcoin, I don't know if it can become as big as gold. That's an awfully big market cap. But there is definitely room and space for Bitcoin to exist. Now, here's the big thing when it comes to cryptocurrency. Bitcoin, Ethereum, those are the two main coins. And there's a few altcoins that are pretty significant that I like. But Bitcoin and Ethereum, those are the two that should be in your portfolio. Your allocation for cryptocurrency, you should dominantly have Bitcoin and Ethereum. Now, what's going to send Bitcoin and Ethereum, excuse my phrase, to the moon is when the Fed or in a body of authorization, a body of authority, put some regulations on crypto. I know that may sound counterintuitive, but once there is some sort of legislation, some sort of restriction, something that allows the big hedge funds, the big, humongous 401ks, that's a lot of market cap. once there's some sort of regulation on crypto, that's when the big money can actually come into crypto. And until there's some sort of regulation, and I believe in regulating crypto. I think crypto should be regulated up into the point that it does not hamper growth and innovation. Innovation is key. And whatever rules are placed on crypto, they cannot inhibit innovation. But once those rules are in place, then the big money can come in. They can invest and buy up the Bitcoins and Ethereum that are not in the crypto space right now. So some sort of rules to govern crypto so the big money can get involved and invest in crypto, that will be the time it'll go to the moon. I don't really like to use that phrase, but some sort of something, okay? I don't know if it's going to come from the Fed. I don't know if it's going to come from Congress. I don't know if it's going to come from the SEC. But someplace, somebody needs to have the authority to regulate crypto. And once that happens, crypto has been secured, in my eyes, made legitimate, and can start accepting big money as a place store value for Bitcoin and for utility with Ethereum. That's my thoughts there, just real quick on what could kick this off into a whole nother realm and why I'm bullish about cryptocurrency. Okay, yeah, and let me just add real quick to your Ethereum question. The Bitcoin chart looks scary. It does. When I zoom out here on Bitcoin, you know, going from 69,000 down to 20,000, 19,000 like it is now. Yeah, that's a big fall, a huge fall. But it's happened before, it'll happen again. Bitcoin has a 4-year cycle that it goes through. And this, if you've been in Bitcoin long enough, you have seen the bearish side of this cycle before. Unfortunately, or maybe fortunately, depending on how you look at it, 2020, 2021 was a big wake-up year for a lot of retail investors to say, hey, you know what? I kind of like this crypto thing. Let's invest in it. And that's how we got to the bull run, right? But the bull run was going to happen regardless of how many investors thought crypto was cool. Just like this bear run right now was inevitable. It was going to happen. And if you're being honest about this too, crypto, Bitcoin, has never seen a Fed who is doing quantitative tightening. We have, for 14 years, we have been in a cycle of quantitative easing, where the Fed balance sheet explodes, where the Fed is putting money into the market. Now we're in quantitative tightening. $95 billion a month, starting in September this month, is being offloaded from the Fed's balance sheet. And that's $95 billion a month being sucked out of the market. That makes a pretty big difference in the market, and why I believe we have not seen the bottom yet for the markets. Okay, let's hop up here. Market Ninja, glad to see you. Just jumped in. Guess I'm a bear when my portfolio is red on a green day. No ready to sell my SQQQ and SPXS yet. Yeah, we are having a bounce right now. This is a short term. You might want to call it a dead cat bounce. That's a technical term. But this is a short term bounce. Okay. There may be bulls in the market who say, oh, hey, guess what? We held support and now we're bouncing. This is so bullish. No, it's not. The summer rally that we had was all front run on the notion that there will be a Fed pivot and it will happen soon, like maybe even September. But no siree, that's not happening. There will not be a Fed pivot in 2022. I mean, gee golly, we just had Fed officials come out today and say that don't anticipate a Fed cut in 2023. Okay. There's a lot of pain left in this economy that we have not begun to even feel in the markets yet. So this is just a simple bounce. They happen because the market doesn't move in one direction. And if you look at 2022, let me adjust this chart real quick. If you look at the whole of 2022, I mean, look at how many rallies there has been in 2022. Yeah, the summer rally, it was the biggest. And let me just kick volume out of here for just a moment. I mean, this is 2022 on the chart right here. Okay. We had the high, and that was set back on July the 4th. And since then, we're in a downtrend. We're making lower lows right here, lower low along this trend line, lower low along this trend line. I'm sorry, lower highs, my apology. And then on the bottom, lower low, lower low, lower low, lower lows. And we have not seen the bottom yet. That is my belief. My investment thesis says we haven't seen the low yet. It will come. Maybe November 1st. Maybe by then we might see a significant low in this market. However, that may not be the low yet. Because I think the midterms are going to be crucial in taking this market down lower. There will be a lot of FUD because of the midterms. Plus the economic data. We're just barely starting to see earnings reductions occurring. The revision lower in earnings, we're just starting to see that now. We get through Q3. How many companies in Q2 brought their earnings down? Not very many. We get into Q3, there'll be more. We get into Q4, there'll be a lot more. And I also think that by December to maybe March, that time frame, during the actual first quarter, I think by then we're going to know for sure how deep, how strong, how long this economy will be in a recession. I think that first quarter there is going to be very key to the recession and us knowing and being able to prepare for how bad it's going to get. There are just so many things kicking off right now that are throwing up red flag after red flag. Let me get to your next question here. What do you think about EQNR, Norwegian Oil and Gas Company? Important for the Eurozone. It was down 10% in the last 2 days, so I decided to add to my position. They are also in renewable energy, forward PE of 5. Rewinding now, so I'll catch you. Awesome. Thanks. Appreciate that. Okay, this is a big question. I'll throw it up here for just a second, and then I'll pull it down so we can all see the chart together. And let me just plug this one in there. We got let's see. All right. EQNR. All right, that's loading. All right, I'll take the question off. This thing has been running pretty wild. And here's the second part, or the continuation of that question. Rewinding now, so I'll catch your reply later. That's so cool. All right, so it seems like 2022 has been very favorable here. It did hit a slow point. It has been accelerating. All right, let's duke this one out. Let's see what we can find here. I want to go back a little bit here to see its history. As a matter of fact, I'm going to go to the monthly view. I want to go from, big bird's eye view and then drop down and get closer in. So it looks like this company became public June 1st of 2001. It had a great run up after going public into 2004. And remember, each candle here represents 1 month. So what looks like a quick run up is several months, maybe even as long as a year. Finally peaked out in 2008, which makes sense. A big fall. Why? Because of the housing recession, the financial crisis in 2008. And when we are in a recessionary environment, supply will go down because demand goes down. And that's what you can see, perfectly illustrated here on the chart for 2008. And then it came back up. So these major peaks here come around, right about $30. And then they pull off. They cool off a bit. So I want to put a little marker here on the screen, right about the $30 mark. And that's about the average. As a matter of fact, $29.19 a share. I want to put a mark there. That kind of marks off the top here. Now, the bottom of the business, again, this is a monthly view, but right around 1425, that seems to be the bottom here for it. So with these two lines that you can see on a monthly view, it looks like it's range bound. 1425 on the low side and about $29 to $30 on the high side. All right, now let's open this back up to where we are today and go to the daily view. And this thing has been running hot here recently. Okay, above the 50-day simple moving average. That's bullish. Remember, bullish above, bearish below that moving average. Right now, though, it is pulling back, and it's under a declining 5-day EMA, which is a bearish signal here, short term. It looks like it uses that 5-day EMA for its support line when it's rallying. And there really isn't too many points in its recent history where it's been declining, where it uses that 5-day EMA as resistance. I guess this one point right here at the end of April where it did that, but it came under its 20-day moving average almost instantly when doing so. So it looks like this thing might have gotten a bit overextended, and that's what made its most recent top here. And if we look at the RSI at that point, let me bring these back down, put volume back up. The top here for the RSI was 78.7. It's 80 and above that's overbought. So it has quickly come back down. RSI right now is at a 38.4. It's under its local bottom, but it has been this low before. As a matter of fact, this other highlighted area here, just above my head a little bit, big spikes in volume there, buying as it was declining, and that RSI got to a 36, and we're at 38. But the moving averages are slightly different there. It dipped just under its 50-day. So here's what I'm looking for. In the short term here, the 50-day moving average, which right now is moving a bit like this, okay? I think that 50-day moving average will end up being an area of support. That's what it looks like, which right now is sitting at 36.5. 36.5 is where that 50-day moving average is, and I think that would be support. But if we look back here, that 50-day, it has been support, it has been resistance, you know, kind of going from, as a matter of fact, let me do this. I'm going to put this rectangle up to help show the peaks and troughs here. And see how it lines up nearly perfectly. All right. Let's really clean that up a little bit there. So this box right here, this is kind of like its trading range that's been in. So I could very easily see it coming back down to the 50-day, catch it as support, maybe hold it up for a little while. But I think looking at this chart and looking at this rectangle here to kind of box in price action, I think getting in somewhere around the 34 mark, 35, is a really, really interesting spot to enter. $34 to $35, I think, is a good entry point. And right now, it's at 35.49. I mean, this was a pretty big drop here, right below that 50-day. So when you look at the volume profile, right about where the wick of this candle is, that's about where buyers step in. So if I were to put another little diagram up here, I'd probably put it like this. Right here. This is probably your go box. This is where you want to step in and buy. Okay. Just looking at the short history here, the top of this buy box is right about $35 a share, and the bottom of it is right about $34 a share. So a $1 swing right here. This looks like a good entry point. There's also a lot of buyers in that price point. So if you wanted to get out, this is also a good area where there's a lot of people stepping in to purchase, especially closer to that $34 a share mark. Just looking at the volume profile, this is the price area where people are stepping in to do their business here. And this is what causes this swing up and down right along its 50-day moving average to occur. So I think it might have got a bit overextended here. Maybe the news of the Nord Stream 1 pipeline being shut down could have kicked this thing up. Ultimately, maybe when that news broke, brought it down, and now it's trying to find its footing. Again, it's not quite oversold, but it is getting pretty close to that point. I think it would need to definitely come down into this box right here, the 34 to 35 a share, before it gets there. Now, if we pull up and just take a peek here, we've got a market cap of 118 billion. Earnings have been rising each and every quarter, although the next quarter it's expected to pull back a little bit. It's got a dividend yield of 2.07%, which is about 33 cents per share. When we look annually, it had obviously a big dip in profit in 2020, like most companies, but it did bounce back pretty strong. If we look on the quarterly view, since Q3 of 21, profit has been rising, which is great. It sits at a profit margin of 18.57% in Q2 of 22. So that's even looking good. Year to date up 34%, but of course the most recent performance, it has come back. And I think it does need to pull back just a little bit further. It could pull all the way back down to these lows. If we look, the last low here, which was the 14th of July, that was a big low, but it caught its 200-day moving average right here, which is a positive. So that 200-day moving average is just under, that buy box right now at $33 a share. Maybe it could come back to that point, and that could potentially be a place to bounce as well. So that's just under that buy box that I have there. Yeah, analysts have a buy rating on it, so whatever that's worth. Technically wise, yeah, it's pulling back. It overshot here in the short term. Let me just take a quick peek here at its last earnings. Overall earnings have been doing really good. Yeah, this is why it overshot earnings. All that profit it brought in. $2.11 per share. Expectation was only $1.63, nearly a 30% surprise there, 3.2% upside surprise on revenue. So that's what kicked this thing off into overdrive. And this is profit taking occurring now. That's what's brought this thing all the way back down. But I think it's overshot where it's trying to, get to. But it does need to break out of this sideways trading that it's been in for months now. I mean, this really began back in March of this sideways trading. It needs to buck this trend and get out of it. One thing I would say positive is if you look at the overall trend, even though it's been moving sideways since March, that 200-day moving average is still inclining. That's a positive. So far things look pretty good here. I'm nickel and diamond here on, an entry point, but overall, I mean, this company earnings are really, really good. Earnings are really good. Big surprise this past earnings. Before that, there was a 10% earnings surprise. There's another, was at 27% earnings surprise. So 11% earnings surprise. So it is pulling in money right now, which is a good thing. And if we, throw up a trend line on what it's recently done here, need to adjust this just a little bit. And you can see the pullback that it had. It really just kind of overshot that. Almost like the low that it made in July when it came down to its 200-day moving average. It really kind of overshot how far it was coming down. Unnecessary selling brought it to that 200-day. And then, of course, it just popped there because of earnings. So, yeah, this one looks very interesting. And if it's getting into some renewable as well, that's even better. Just reading its little synopsis here on the company. It's a little bio. Just trying to look for any of that. Yeah, renewables. No, that's all it says. I haven't seen anything else yet specifically about renewables, but of course you can always go to the website and dig into this one. It operates, all over the globe here. That's pretty interesting. I can dig into the earnings sheets here to learn more about the company. But what I'm seeing here is pretty interesting. Can you please go over Enphase and sure. Yeah, solar stocks are doing really good. All right, so I think you've got an interesting company here. I think the $34 to $35 entry point seems reasonable. If it does overshoot, tag that 200-day moving average, which is at $33 right now. That's just as good as well. So it does need to break out of the sideways movement, but the inclining 200-day moving average, while this sideways movement was occurring, is a positive too. Earnings look really spectacular. They look great. So, this is an interesting company. Definitely keep it on your radar. And if it fits your portfolio, then, run with it. But just surface level stuff here. Obviously, it didn't dig, too deeply into this company. Things look interesting for sure. Okay, I'll roll over to solar now. ENPH. Enphase is my number one, maybe number two stock out there. I love Enphase. I've been holding Enphase for a long time now. Enphase, the stock, news flash here. We do a top 10 momentum stock list. It comes out every week. Enphase, no surprise, is on it. Its relative strength and momentum has been incredible. When you look at the chart for this thing, it looks like a scary monster with the way it moves. Maybe like Bitcoin. However, with that said, this is one of my top companies. I love it. I think it is very expensive as a stock. I do want to point that out. This is a very expensive stock, but what this company does is incredible. I mean, incredible. So I like this company a whole lot. This is a long-term, decade plus hold for me in my portfolio, and I absolutely love it. And if you look here on, earnings right side of your screen here in this box, it's been kicking it. 24% surprise to the upside, 15%, 22%, 21%. I mean, it just keeps blowing analyst expectations out of the water. And it's just an incredible company. Profit margin has been kicking up. I mean, look at the performance, up 70% year to date. Enphase, up 70% year to date. How many companies in the market can you say are up 70% year to date? It's hard. It's really hard. I know they're out there, so I don't want to, but it's hard. 76% in the last 6 months, 55% in the past 3 months, 4% the past month, 9% in the past week. This stock is incredible, but the stock is expensive. I just want to say that, and I don't want you to think that all this praise that I'm pouring on it, I do admit that it is an expensive stock. So looking at Enphase here, this is not where you want to get in, okay? It had an 8% pop today. Man, honestly, I don't know where the right price point is to get in on Enphase. The 220 price point is an interesting price point to begin with, okay? But it's nowhere near that. It's at 316. It's not even close to being at 220. And 220 was a ceiling for Enphase for a while, okay? If you look at the top here, I'm going to try to line this up at 220 right here. I mean, you can see that this used to be the ceiling for Enphase, but it is no longer. Now the ceiling, it overshot it today with a new 52-week high. How many companies out there can you say hit a new 52-week high today? Enphase is one of them. Now, it's got a top here. It's right about 306. Let me get this line on here. Solar stocks have just been, all right, come on. All right. Solar stocks, alternative energy stocks. What's going on? Why is it not letting me put my trend line up? There we go. Okay. Change that color there because that's the top. Enphase hitting a new 52-week high today. It has got to pull back. And you can see, the big run up here after earnings. That's what shot this thing up again. Earnings. Because they are incredible. They're absolutely incredible. Look, a 24% surprise. A reported EPS of $1.07. Expectation was 86 cents. $530 million in revenue, 4% upside. Just wonderful. But this earnings excitement, I don't know if this is a new, kind of plateau here for Enphase, but in my book, 275 is, oh, come on. 275. Enphase has got to get back down under 275 for any type of entry. At least it's got to get back down to that point, bare minimum, before any type of entry, right? Very expensive stock. Last earnings propelled this thing to incredible heights. I don't know how long it can hold this 275 base to, 305, a $30 swing right there. I don't know how long it can hold this, but because it's way overshot its 50-day moving average. And whenever it's overshot its 50-day, let's go back to earnings last October. Let's look at this. Here, after earnings, it completely overshot its 50-day moving average, right? Completely overshot it. Same thing occurred here after earnings. It's up here to the moon. Its 50-day is down here. I think Enphase is going to start coming back down. This 50-day is going to start arching over, just like it did back here in October, November timeframe. I think we're going to see a similar situation. And then price is going to start coming back down. And at some point, it really needs to come back down and tag that 50-day. Okay. So while I think Enphase has just completely overshot the moon here, I mean, this thing went to Mars, not the moon. It will pull back. It will come back down. And I think it'll come back down to that 50-day moving average. So if you want to enter in on Enphase, you've got to wait for this thing to cool off. I don't think where it's at is sustainable right now. Something under that 270. And if it breaks this 270, since there was this gap left here and this gap left right here, right? Going back to the last time it really overshot from earnings, there was this humongous gap left right here. And that gap ended up getting filled. So I would say be patient on Enphase. Watch it. Put it on your watch list. These two gaps that it made from earnings will eventually get filled. And it gets back down close to that 220. That's when I think you should start really considering getting into Enphase. That would be my thoughts there. Getting in now, you're setting yourself up, I think, for getting underwater in this stock. All right, so that's Enphase. I love the company. I hold it. I hope you will, but it is expensive. Wait for this thing to come back down. All right, SunPower is the next one we'll go look at. SPWR. for SunPower. This is another nice one. There's a lot of solar companies out there. Again, earnings. Look at this. Solar has just been crazy right now. The thing is, though, none of it right now is sustainable. Okay? There's these big price movements, price swings, and it's just not sustainable. All right. Look at SunPower. Look at that big run up it had in 2001. It was hitting, meme stock status. February 21, it hit its high, and it's been in a declining 200-day moving average ever since. Even with it right now, that 200-day moving average, that's that yellow line going like this, it is still declining, okay? And right now, because of its last earnings, it has overshot its 50-day moving average, right? It gapped up right here. It made this big move up. Its 50-day moving average was right at its launching pad, and now 50-day is going up like this. So it is still way above that 50-day, okay? It had another nice 14% move today. This is just becoming like meme stock territory. Wait for this one to come back down to that 50-day moving average, and then if you like the company, I don't like it as much as Enphase. I do not own this one, but it is a very popular solar company. I like it, but I don't own it, okay? Let's go down here and just look. Earnings here, it did have a real bad miss on Q4 21. Typically, earnings, here's a 6% surprise to the upside, 35% surprise to the upside, and going back before the miss was a 2%. Earnings are just going up considerably, right? Down here, profit margin over the quarterly view, it's been dropping the past several quarters. If I go to the annual view, you can see big time underwater in 2017, 2018. Profit started to climb into 2020. Then 2020 hit, and that put a damper on its profits. And now it's got to kind of, get that under control. Performance, it's up about 30% year to date, which isn't too bad. Obviously, it has not been performing like Enphase, but SunPower, it's another good one. I like it, but I don't own it. I'll put it in that category, right? So price, again, it needs to come down to that 50-day. It's overextended right now. That 50-day moving average is at $20 a share, and it's at $27 a share. So it needs to pull back. And if we're talking about gaps getting filled, the gap that was, again, left down here, the top of that gap is somewhere around 19. The bottom of that gap is somewhere around 17. So price could come back down, fill in that gap, and then it may find a bottom from that gap that was left. So that's your possibility. The bottom here, when we're looking at price action, is right about here, okay, which is right about $15 a share. That's where it's, been coming down to. And looking at the volume profile, that $15 a share up to, about $17.50 a share. That's a price range that this thing has been trading in. We've got the volume profile over here saying, yep, that's the price point people are trading around at. There's a little air gap right here on the volume profile per price point, and then it picks back up. We'll call it about $20 a share, which is, again, there's the bottom there and right there, $20 a share. and the top of that is about $22 a share. And you can see that lines up about to where it bottomed after its big run from earnings. So dipping under $22 a share, I think, is in its near-term future. We can come back and check that, but I think that's totally possible, and I expect it to fall below $22 a share. Maybe you can pick it up when it breaks this air gap over here. This air gap right here is what I'm talking about, where people do not step in to buy SunPower at all, and they're in between price points there. So 22 to about $20 a share. You know, if it can hold its momentum, that's a good entry point. But if it does break that and come fill this gap down here from earnings, then you're looking at somewhere sub $18 a share. That's what I would be looking at for SunPower. All right. Okay. So, yeah, the lot of doodling there on that chart. All right. Any other questions, or we can wrap this up? We've been going pretty long today, but I greatly appreciate all the questions. I really, really do. Because this live stream, it's for you. If you have questions, plug them in, and, you know, we'll go over them. All right. So there was Enphase, SunPower, Bitcoin, Ethereum, plus all the market talk with the SPY and Qs and IWM. Yeah, this has been a pretty educational stream, I think, because we've been diving into a lot of different topics here, and just looking at technicals on the chart. Hopefully you guys are walking away from this live stream with actionable information. You know, to me, that's the most important. Actionable information. So, yeah, I guess we'll wrap it up here. I'll be back tomorrow after the market close. We have got a live stream every day the market is open in the evenings to talk about what happened, why it happened, understanding that, and then what to expect going forward. So click that like button for me, share this video with a friend, and if you like this perspective and you want our weekly expected moves, numerous trade setups, top 10 stocks, then go ahead and click the first link in the description. Join our Discord. That's the second link in the description. We've got a private and public channels there to discuss anything and everything investing, trading related. So check that out. Join if you can. And yeah, with that said, thank you for spending your time with me this evening. I greatly appreciate it. And I will see you in the next video. Have a good night.